Welcome to Trading Lounge and the US indices for the 22nd of the 12th, coming into Christmas. So what I'll do over Christmas, I think, is that we'll probably just continue charts out, but obviously not through Christmas and the New Year. So there'll be a bit of a break in there. But in regards to the videos, though, I'll just keep my finger on the pulse and see. Put out a video, and I might put out a video that includes a couple of markets and so on. So even though I'll be really light on the servers in that week over Christmas to New Year, I'll keep a bit of an eye on things, and if there's any volume that comes into the market and anything that needs to be said will be said. But yeah, so we'll be there, but we'll just be there light on. But we'll be there if a market, be it gold or Bitcoin or whatever, is moving in a particular way, then we'll be all over it. But we'll give you those dates, of course, in due course. And it was interesting. My wife was saying regarding the stimulus this morning, yesterday, with the $900 billion, and you got one side of politics saying that it's a socialist thing, and giving them money is the path to ruin, in a sense. And but my wife pointed out that but isn't that what the banks got? When they needed money, when they ran into problems, isn't that socialist as well? So I thought that was a good point. But the economy itself, as you may know, is the US economy anyway is in a lot of strife, and it's never really recovered from the 2008 GFC, but the problem was way before that anyway. But since the 2008 GFC, you've got the repo market that's never made a new high again. So the repo market's failed, and that's basically just the prime banks giving out money to the economy. But those prime banks, they've been burnt 3 times before, so it's not like they're going to be burnt a fourth time. But that repo market, that's the actual engine of the economy, and if those guys are not risk on and giving money out to valid companies that have got turnover and looking for growth and those sorts of things, that repo market's not working, then the engine of the economy is not working. The Feds can give them all the money they want, which they have, but they're just not spending it. They're not going to go into that risk. So that's the real problem, and that's why the gold market is not just been going up now, but going up for a long time, because of the Feds not recognizing the real problem. And the Feds will recognize that gold going up is part of their inflation strategy, but when it goes up too far, they'll realize what they're doing. It'll go up so far, and there'll be no inflation, and they'll realise what they've done. And I mean, you have to remember, in 1979, the government stopped you buying silver. So that's why they pushed the silver market back down at that point. So, I mean, you weren't even allowed to buy gold from 33 to 79 as well. So anyway, the problem is just compounding, and it's not a matter of Democrats or Republicans in that regard. It's all just one big family with one big issue. So anyway, I hope we can have a nice Christmas. I'm obviously not American, I'm Australian, but it's just looking at the problem from the outside. But that gold market will continue to rise based on the Fed's actions. So with the markets here, it's kind of interesting, really, because we've got the Nasdaq, the S&P 500, the S&P 400, which we'll also look at today. We can have a look at the Chinese market too within this space. We can even have a look at the European market, but they've all got their own little things to the upside here. I mean, I think I will just have a look at the Chinese market a bit. I'll just go off track a little bit today. I might just do it on, might be better. First of all, I'll just have a look at the S&P 400, because I've got that label. So with the S&P 500 here, well, we've got sorry about this, but with the Nasdaq here, we've got wave 3 here with an A wave, a B wave, and a C wave here for wave 4, then wave 1 and 2 here, and looking up for 3 and coming back for 4 and going up for 5. So we can look at that again. It's possible to count 5 waves up here as 1 and 2 and 3 and 4 and 5. Very difficult to do and easy to count this down in a corrective pattern as well. But it's hard to do. It's hard to count 5 waves up here in the S&P 500. But when you have a look at the S&P 400, which is this one here, we've got this as the A wave, the B wave, and the C wave here on the NASI and on the S&P 500. But on this market, the S&P 400, the smaller stocks like the Russell, they're the ones that are leading to the upside. We can definitely look at that as wave 1 up here and wave 2 here. And then we could bring this all in here as wave 3 and 4 here and going up for 5 here. Yes, we'll need to lodge all this in, but I'm just talking, this is really from this low here from the 1st of November, or the beginning of November anyway in this case. So in this case, this move up here, we've been looking at it in 5 waves. The best market that we've got, really one of the best to the upside from that November low here, is the FTSE here, and it counts up quite nicely as 1 and 2, and then all of this is 3 here and 4 here and 5 here, going into an ABC pattern here. And this is what we could be looking at with the S&P as well. In this instance here, the 50-60% retracement level is much lower down through here. It's not that this market has to pull, a wave 2 doesn't have to pull down to 60%. It can pull down to 1 point down below here as well, or it might just pull to where it is here, where that main support is there. But if this market, for instance, finds support on 6,500, nice classic trading levels pattern on here, then we can go up from this point. But the reason just for showing this is there's 5 waves in that structure. So that means that looking at this move here from the November low coming up into here for the S&P 400, that would need to be 5 waves as well. So on the S&P 500, we've been looking at this November low here. We've been looking at that as up as 5 waves. Now, will it pull back to the 61.8% below the 3,500? I don't know about that, but what we need to do is just work in here and work out at what point we can go long for if this moves up here. There's a possible other ways to count this, and we'll go into that in a moment. But I just really wanted to also show you on the, if I can just go into, where are we here? See, I see the Chinese market moving up further. Let me just, well, this is the Shanghai comp here. Now, I'll just bring this in here. This is the Shanghai market. So it's a bit different, but I can see from the low here that we've got 5 waves up here, and then we've got back here as an ABC back, and then we're moving up into this space here. So this here, just in Elliott terms, this is a wave 4 here. We look at this as wave 1 and 2 in here and 3 here, but definitely 4 in here, and then moving up. So this market will continue to move up here. So if that's going to be the case, then you know, other markets around the world are going to, you know, the commodities are going to be moving up based on this. And if the commodities are moving up, then you're going to see things like Australia move up, and Canada and Brazil, and, you know, all those other emerging sort of markets. And but if they're going to move up, well, then, you know, it's highly likely that the S&P is going to be moving up higher as well in that case. So yeah. So also too, on the S&P 400, we can count that up as 5 waves here, but it's hard to do that on the S&P. We could do it on the NASI, and it's possible to count this down as an A and a B and a C here as well. So it's possible that we could look at it in that way, but we won't go there yet with this particular market. So it still leaves me with the situation where we've got this market moving up for wave 1 and back for wave 2. That would be in line with the DAX and the FTSE and all those sort of things. But do we do it here as well for this? It's a little bit difficult to do it in this case for the Nasdaq. Not that they all have to be the same anyway. we're looking for, well, from wave 2 here, we're looking for 1 and 2 and 3 and 4 and 5 here for wave 3. We're looking back for wave 4 that can pull back to the wave 4 one lesser market, one lesser degree. But all we really need to do, whatever this is here, we just need to be able to recognize this as a corrective pattern. If that's a corrective pattern, then we can buy new highs. Yes, we'll be able to get a better position and all that sort of thing in there. But our job with all of this at the moment is, well, to recognize if the move down here is corrective. So that's what we'll be looking at here now in this regard. So yeah, so let's just go in and have a look at this on the 4-hour chart. So this is looking from that November low here as 1 and 2 and 3 and 4 here. And then looking at this as 1 and 2 and 3 and 4, and looking at this as 5 up here. It's possible to have it on this low, but it's also possible to have it on this low here as well. In fact, it's probably a better fit on this low, but there's something we can look at there. So the 50-60% retracement level is down at 3,500. Will we come all that way down into that point? I'm not quite sure, but we need to be a little bit mindful of that. Now we had this other count too that a member, Amaray, nutted out for us here, which is also valid as well. I think it's on this count, which is looking at this as 1 here and 2 here, then 1, 2, 3, 4, 5 for 1 here and back for 2 here, and that's already pulled back to the 61.8% from that low here to that high here in that instance. So yeah, so that's all done and dusted, and this move down through here, it just looks corrective when I look at it, and we'll look at that in a bit more detail in a moment. But this is just another count that well, it's valid. It's just as valid as any other. If that is the case, we'd need to see, that's wave 2 and this is wave 2, we'll definitely need to see this market push up strong from that point. It'll take a little while to get through these highs here, but up for 1, back for 2, and so on, push up here quite strongly in this third wave here. So we definitely need to be mindful that even if you're locked in on the bearish side, which I don't think you should choose sides, you just should take trade setups. So it's dangerous being locked in on one side, and unless we're really sure about things. But being sure about things, taking out this high here, you wouldn't get much sort of surer than that. Yeah, I mean this this resistance through here can go back way back to to the weekly chart that this particular top through here. So it's partly struggling because of all of that. Yeah, we've been to the 4-hour chart, so we'll go to the 1-hour chart here. Now on the 1-hour chart here, this has got this has got the count that the Nasdaq has got. Okay, so in this instance here, it's just this count here with this. But with this one on the S&P, this move down through here has already overlapped wave 1 there. So hasn't overlapped it in this particular instance here, but it also hasn't come back to the wave 4 of 1 less degree, and maybe we need to look at this as wave 1 and wave 2 up here as well. We'll see, but I think, like I just said, if we can just figure out this being the corrective pattern or not, that's what we'll be considering there. So I don't think this is the count here for this market, because as I mentioned, this low here has already made a low below the top of blue wave 1. Yeah, let's go to the 15-minute chart here where we've been putting our trades in here. So as you know, coming up in this last trend here, we can have wave 4 here. And we can have either wave 4 here as well for this. So not that it matters now because it's all over and done with, but it does matter where this top should go here. So this wave 5 top, obviously this is probably the high here, but this is a nice 5 waves up here. But either way I look at this here, if I took it just from this high here being conservative, if I took it here, I'd look at this as the A wave here, the B wave here, and then 1 and 2 and 3 and 4 and 5 here. So it does count down as corrective here. If I use this as the high here, then this would just make it corrective even more so. This move up through here, it can be counted corrective or it can be counted impulses, just not over yet. But it's really at the 3700. It's above the 61.8%. If I just take that from there to there, so 61.8% is there. So not that it's a big deal. Markets like to be pulled to large numbers. They're like magnets. And we could look at this as wave 1 and 2 and 1 and 2 here, and moving up here further. What we could say here is when we break down this problem here, if we got this low here and that top, then we could look at the 60% retracement level, which is kind of in that space. So if the market dropped below that, then it's probably bearish at that point. If the group 2 here, the 65 here, became the retested resistance, then it would wave a flag at that point. If the market found this number here, the 3650, which is part of group 2, so minor group 2, this is subgroup 2 in here, 65, 72 and 80, that in the next degree higher would be that 65 number here would be this number here, this 650, and then the 72 in here, and then the 38 here. That's minor group 2 here in the bigger picture. So if it dropped out of minor group 2 here, then obviously it's bearish at that point. Okay, so that would be, if you're unsure, that at that point, that's having this as resistance here, or even being that far down, would be bearish at that point. And then we could look at it as the A, the B, and the C wave coming down here further for this. And that would bring us down to, well, the C wave here. It doesn't have to come all the way down to the 61.8%, which is about here. But I'll just put it on the 35 here, because there'll be some sort of equality between this move and this move here. Yeah. So, and also too, this, if there was going to come down this far, it would be something like wave 1 and 2 here, 3 and 4 grabbing hold of here, and 5 coming into this space and then pushing up from there. So it'll be something like that at that point. And if that's the case, then you can go long on 3600 if we get 5 waves down through here. Could that also mean more bearish picture at that point? Yeah, possibly. Something that we'd need to look at, and I would make a video on that, but it's still only Tuesday, so I'll be making videos on Wednesday and when is Christmas? The Friday, Thursday. I have to check when the markets are open, all that sort of stuff. But like I mentioned, I'll be keeping an eye on things. So the other point to this is that if we're going to go long, then we want a classic trading levels pattern. So at the 3700 here, this line through here, imagine, that would need to see the arrival, which we're getting now, and would need to see the reaction, would need to see the first high above the level, and then an ABC pattern down here. That top becomes your going long point, this reference point here on the second one, and you may be able to get a better one over here a little bit closer. So looking at that here, if it was going to be bullish, would see the arrival, the reaction, not sure how far it pulled back, it doesn't matter, and then we'll see the first high above the level, probably into this space here. Then we'll see an A and a B and a C wave here, and then up from that point. So that would leave you at going long at that point. So we can just move that across there. That's the safe long trade. Okay, doesn't get much simpler than that. And that could certainly be the case, when we look at, as I mentioned, when we look at the FTSE here. With the FTSE, we were looking at, if I just clean this up a little bit, oops, cancel that. We're looking at going long above this top, then we'll bring it down to this top, and now we can bring it down to here. So what we're looking for here is the same thing as well. I'm not saying that we're going to get this set up, and we may come lower first, but the arrival, the reaction, the first high above the level, then the ABC correction here, and that's our setup for the FTSE on this side. So I'm just, because this has got the best shape here, I might as well just bring in the DAX here as well. This is the DAX here, so we're counting 5 waves up for the DAX. We got the first high above the level. We still need the second one here, and we may get the third one come in here, and the same thing here again as well, and we'll be able to go long from there. So these are the, it's just good if you look around at other markets, because one will be leading and one will be following, and so on and so on. Okay, so I think it's probably a good idea just to have a look at some stocks while we're here. I just wanted to have a look at gold while we're here as well, because we've the move up through here. Yes, it could be just an A, B and C here and fail here and come all the way down here, but otherwise we've got those little 5 waves here that arrives at the 1900, and we'd be looking for the arrival, the reaction here. So we're looking for some sort of ABC pattern here, then the first high above the level, and then this type of thing. So then we're looking to go long here for that there. Okay, that's just why we're there. Why it popped up, I had to say that there. So I wanted to bring up, so this is Amazon here. So we don't really want to see Amazon take out this low here. It can pull back 61.8% here, so that can leave us. I haven't put a long trade on for this. In fact, I've taken all our trades off tonight, as you noticed. Because, well, partly because of what's happening with the markets, but just coming into Christmas, the volume can be lower as well for these markets. Apple, Alphabet here, we're looking for, well, we've got wave 4 here, so we're looking at wave 1 and 2 here, and then we're looking at 1, 2, 3, 4, 5 here. Now this 5 can be wave 3 or wave 1 here. So wave 4 can come back to the wave 4 1 less degree where it is now. So we definitely need to see the market pick up from that point. If it was going to drop any lower, then we would have to look at it as the green wave 1 and 2. So we're not long in this market as at the moment, or officially anyway. So that would bring us back down into this space here. So if it came down to that point, then we would need to look at that here as wave 2. So one way it'd be nice to sort this out. So just a little bit of patience to sort this out in this regard. So that will sort itself out shortly. I mean, this could be an A wave down here and a B wave up here and a C wave down here, by the way, for this. I've also been trying to look at these markets in a corrective, more bearish tone. And in that as well, I mean, we can also look at, we could look at Apple in a bearish mode here as well. If I just copy that here and put that there, that can be wave C here for that, sitting right there. I don't think it's the case, but this could be an yeah, this can be an A wave here. Well, in fact, that would need to be a B wave over here. Sorry about that. I saw it, but didn't get it right. So an A wave here, and then an A and a B, and then a C wave here in 5 waves. 1, 2, 3, 4, 5, diminishing into that point there. And then dropping down into wave C over here for this. So these patterns that we're working through at the moment, they can be bearish, but that's why I've mentioned with this market here to buy on 130 as the support, because if that's the case, then this count is correct for that. So these markets, all these stocks that we're looking at can be bearish through Christmas time, so we just need to watch that. If this market here, for instance, drops below this low here, if it drops below this low, then that's bearish at that point, because that destroys the wave structure at that point, because that's definitely 5 waves there, and that's definitely 5 waves there. So taking that low out here creates that bearish move for that. And I'm just pointing out these things before Christmas as such. What else have we got here? Facebook. I mean, Facebook just looks bearish anyway because, I've always been able to count this down here as 5 waves here, and this just looks corrective here. It just doesn't look bullish here. Our last saving grace here is this wave E sitting here, so a move below that, I suppose, that could be played out as, let me just do this here. I'm just doing this to give you an idea of what can be on the bearish side before going into Christmas, because I don't want people getting caught out. So that can be the A wave, that could be the B wave here, and a C wave all the way down here. I was just also looking at this as an A wave, a B wave, and a C wave here as well, with 1, 2, 3 here, 4 here, and 5 here. So there could be, it's possible for this to have one more low here and then push up from that point. That's also possible as well as a count. But otherwise, we could look at this from this top here. Can we look at that as the B wave? No, because it's up there in 3 waves, so it's got to be part of that situation. So if it was going to drop, it would drop down into this space here, making a larger A wave, B wave, and C wave down into this space. At the same time here, if that high here gets taken out, then you can also go long from that point there. I mean, we're in corrective patterns here, and that's, they can get messy, and this is messy here. There's no doubt about that. And even though the pattern's maturing, it's still not really giving me any sort of clues, because, I mean, technically this here, this low here, that to me is up in 3 waves. So that's telling me that low there is going to be taken out. That's what that's telling me. Yeah, a lot of this other stuff can be counted in different ways, but that's what I can see in this space just here. So it's possible it can be an A and a B and a C wave down to this point and then moving up from there. But if that 265 becomes the retested resistance, then the market's going to drop to the 250 at that point. And if that's the case, then we're going to get a spike down to probably the 240. Alrighty, I'm just going to leave it at that. Yeah, alrighty. Thanks for tuning in. Cheers.